Hello all, welcome back to my channel. This video is about Bank Nifty review based on Camarilla pivot points. This video I felt as something important and you can learn much because I do learn many things from the month of October. We do usually review based on just Camarilla, but I just added few more points that can help you to make a profitable trades and to avoid the losses. So please do watch the video till the end so that you can just gain the knowledge wherever I pointed out. You can just learn those and you can avoid the losses. So this review is only for the day which actually market opens between H3 and L3 in the month of October. So if we consider this into criteria, we have these 9 trades only for the month of October, and out of these we can take these 4 trades and we should avoid these trades, or we can take and we can exit with the cost price. I will explain you why, the reason behind it. So this is about the trades we had this month of that is month of October, and these are all the criterias we need to consider along with the Camarilla pivot points. So one is, if you take entry after 15 minutes, the current day low, that is the first 15 minutes low and high, will act as a support and resistance. So you should be careful when you take an entry after 15 minutes. That is one. And you should consider support and resistance that is formed at the end of the previous day, that is afternoon session. You can consider there should be some resistance or support that could be easily drawn for the previous day, so that can also be acting as support and resistance. And also the trend with the Camarilla pivot points, I will explain you what it means. And also you should consider previous day high and previous day low should not be between our targets. So if you take a trade and if you have a target L3 or H3, you should not have a previous day high or previous day low in between that, so that will be acting as a resistance and support though. So it will avoid you to reach the target. So but still we can take trades. I don't say that you should not take trades if we have these criterias. What you can do is, you can take a trade and you can put your stop loss at your cost price. You should not follow the normal stop loss procedure. You should have a stop loss to the cost price. If you don't have these criteria, you can place target and stop loss as a normal Camarilla rules as per the video which I have posted you earlier. You can follow that. So let's get into the first trade of 9th October. So 9th October, if you see, the first candle gives you the bearish things. The things which we need to consider is, the first point I will show you, the 15 minutes, but the entry is immediate to the second candle, so we don't have. And we need to consider the support and resistance we have in the previous day, right? So this is the support, and I always consider the body, not the wick. Okay, so if you see this body, I will draw you the horizontal line. So this is actually a big support we have, which is formed in the previous day, and this is the actual resistance we do have. That is actually a previous day high also. So this can be a resistance, and this can be a support apart from Camarilla lines. Okay, so that is one, and we are done with the second one. And third is Camarilla pivot points trend. The trend, what I mean is, see, if you see the previous day Camarilla and current day Camarilla, it shows the uptrend. Okay, the current day Camarilla points are higher than the previous day Camarilla, so it is an uptrend. So the trades, if you are going long, that is supportive, and if you are going short, you should be more careful. Okay, so the trade which we get is short, so we should have the cost price as stop loss. That is one. And also we should have cost price as stop loss because we have support here. That is, without reaching a L3, there is high possibility to turn. So that is what happened here. And the last point is, previous day high and low should not be before target. We don't have that. We have previous day low after our target, so we don't consider. So if you see this criteria, it actually it actually consider these criterias into the account, right? So it is opposite to this criteria, so we need to have this cost price. Let's move on to next trade. So we should not, I do say don't take trade, but you can take trade on the second candle you can go short, and you should have cost price as your stop loss. Instead of having stop loss at somewhere else that is above H3, you should have a stop loss as a cost price. That is what I would recommend you to do, because if you don't take trade, sometimes if you see this 9th of October, it would have reached L3, so you would have missed the trade. So you can take trade, but make it as a cost price as stop loss. So the next trade is on 13th October. Market open between H3 and L3, but if you see, we see a reversal. We don't see perfect reversal here, right? So if you see, this is a bearish, even though it is green candle, it is a doji candle that resembles a bearish things. See, continuously we see bearish things. So market is not able to break this previous day low and it comes up, okay, but happens on 10 o'clock. So what I do see is, it is after 10 o'clock we should consider the current day 15 minutes high and low as support and resistance, right? So if you place here, it is a one of resistance. So if it satisfies the first point, and second thing is, we need to see whether support and resistance formed on the previous day. So if you see the support and resistance, I will just hide this support. We do see a support here, we do see a resistance here, okay. So I will just consider the body, right? So I will just place, I'm considering this as exact resistance, and above that we do have another resistance here, okay. Now I'm enabling the Camarilla. So if you see, even though if you take long position, you have these resistance. So that is the reason what you should do is, you should place your stop loss as the cost price. Instead of placing it below L3, you should place your stop loss as the cost price, so that it can hit it here. So sometimes people would like people who is targeting for 1:1, for those it would be and profitable trade. I will show you why. I will show you that. If you go long here, because this particular candle, that is 10-10 candle, is something bullish, and also it breaks out previous day low, right? So we can go long above, that is high of that candle, and stop loss should be below this, and 1:1 is easily achieved. So stop loss should be this 15 minutes candle should be acting as support, right? So I just placing it before. So more than 1:1 we are getting. So some people might have profitable trade, because this can also be a profitable trade. But still, if people who are waiting the target to be H3, for those it would be an cost price, okay. And next is 15th of October. And one more thing is, if you see this Camarilla pivot trends, it is actually downtrend, okay. The previous day Camarilla pivot lines are higher than the current day, so it satisfies the third point, the third criteria also. So be careful on those trades. As much as it satisfies these, you should be more careful on those trades. That is my point, okay. And next is 15th of October. The first thing is, it is an uptrend, so if you go long, there won't be any problem. So next thing is, you need to consider resistance of previous day, right? So this is the previous day resistance, and support is at this place, that is this is also a support, okay. So we don't need to consider this support, because we do already have a Camarilla support here, so we can just ignore them. We are going long here. After seeing this reversal candle, we need to go long here, but you need to consider two things. One is, the current day 15 minutes should be acting as a resistance, so your target should be the current day's high, and your stop loss can be just below L3. That is one. And second thing, if you still need to if you are looking for higher profits, what you can do is, you can trail your stop loss. You can, once it achieved the current day high, you can move your stop loss to the cost price, and you can wait. And if you see, the next resistance is current day, that is previous day high, that also broken, and it went to H3, not exactly to the H3, but below that H3. So this is a profitable trade, and it is a good trade also in the October month. And next trade is 16th October. The candle opens between S3 and L3. If you see, the Camarilla supports short, not long, right? So if you see, we got short trade at this point. People used to consider this as reversal. They can go short here, or if it is this, you can go short here. But the problem is the current day 15 minutes high and low will be acting as a support and resistance, right? So what happened, this low is acting as a support. So if you go entry below this, it is good, but still if you need to wait until this 15 minutes low broken, okay, but it didn't broke, right? So if you see, it just reversed from here. So that is one. And if you consider other points, the first one itself satisfied, right? So second one is support and resistance formed previous day support and resistance. If you see, we have support here, so it's, but below, before that itself we have a support here. That is a current day low, so we don't consider that. Camarilla pivot point show the downtrend and it is for short. That is actually a favorable for us, so we can ignore this. And previous day high and low also it is there. So if you see, even though if you go short here, you should place a target at previous day low instead of placing at L3. Okay, so this is also trade where you can just place your stop loss at cost price, because of the first criteria favors it, right? So we should avoid that. The next trade is on 20th October. 20th October, market opens between H3 and L3, and a market favors for long trade because the Camarilla shows that trend as uptrend, and that is one. And previous day high is there, so we should target for this line. We should not wait until H3. So you can exit at this place, or you can trail your stop loss till your target reaches to H3. So this is a profitable trade. And if you see, there is not good a good amount of candles which actually forms support and resistance on the previous day. Though we have, I will draw that, we have resistant here, so it is actually already been reacted and it broke, right? So you can go long here, and this is also a resistance, that is previous day high. And if you draw support, this will be a support. Okay, so as we are going long, okay, that is one. It is target is achieved on this. And 22nd October, candle opens between H3 and L3, and it supports for long trade because Camarilla is showing a bullishness based on the Camarilla points, and that is we need to look for a long trade. And we got a reversal at here. The problem is it is after 15 minutes, so the current day high is acting as a resistant. If you notice the first point, the 15 minutes as a support, right? So if you draw a resistant line here, your, even though if you go long at this place, stop loss below this, and you should target should be the current day high. Okay, I don't consider the wick because sometimes it reacts below the wick itself, so I do have a target only till the body of the first minutes. Okay, and the trade is the people who took trade that can be profitable if they exited at the current day's high, or else it can be a cost price exit. Okay, I don't consider this as a loss trade because based on the observations we have on these 4 points, it satisfies the first one. So we should be putting a stop loss as the cost price. Next trade is 26th of October, and this Camarilla, we can't identify the trend because it is actually inner Camarilla lines. We don't have trend here. Either you can go for long or short, that is one. And we see reversal after 15 minutes, no, right? We see reversal immediately the second minute itself, sorry, the second candle itself. So the current the first point is not satisfied, and second point, we need to draw support and resistance, right? So this is one of the support, and this is the resistance. Okay, but I will just show you how we need to check. Okay, so if you go for long, you can go long, and you should have a target of this resistant line, not above that. But what happens, it just reversed and it hit your stop loss. So this is actually a loss trade because you should have, because it favors us. We don't have any problem because we can go long here, and our target should be at this resistance, and stop loss should be just below this previous day low, but stop loss it. So and 28th. Okay, 28th is market opens, okay, and it is Camarilla shows the bullishness, so it is good for long trade. That is one, and we do have a resistance here formed the previous day high, okay, and we do have a support at this line, okay. That is one. So what happened is we don't see a reversal, we see a reversal at this point actually, okay. But what we can do is we can go long here. We should have stop loss and we should have target at current day high, not that is current day high, because this will act as a strong resistance, right? So this is actually a last trade. If you take this, and next is I will mark this as loss, and I missed out that, and 30 is a profitable trade. If you see the Camarilla, it shows the downtrend because of the current Camarilla lines is below the previous day one, and it is for short, so you can look for short trade. We need to wait for the reversal at H3, and it gave a reversal here, but you need to consider the current day 15 minutes high and low, right? So if you see the current day 15 minutes low is here, so we don't have any support also in between our target, because our target is L3, so we are good to go for this. And the short trade is we need to go short here. Target will be L3 and stop loss will be just above previous day high, so the target is achieved. But one thing I need to mention is this is something very it shows a bullishness, right? So if you see a longer wick on the downside, so I would like to keep my stop loss as a cost price once the price reaches to this level, okay. Why? Because it might reverse from this area. So once the price reaches to this area, this line, you should make your stop loss to the cost price, and you can wait until it goes to target, okay. But the target is achieved. So overall this October month we have 3 profitable trades and 2 loss trades, and if you take these 4 trades, that is 9th, 13th, 16th and 22nd October, that would be exit at cost price. This is based on these 4 scenarios along with Camarilla. So that's all from the my side on month of October. So please it will be very easy for me or for anyone to review after market prints the candle. I agree with that, but I just wanted let people know that we have these criterias that actually made these days as losses or profit. We should know the reasons why market have behaved, right? So that is why that is the reason I made this video. Even I don't know exactly these reasons before the candle prints. After candle prints, these are all the learnings which I had this month of October. So that is the reason I want to share with you people, so that you can be cautious in the coming months based on these criteria. Along with Camarilla, you can improve your trades. That is why I made this video. If you feel this video as very useful, you can share with your trading community, and subscribe to my channel if you don't. Do like and comment if you have any comments, and also if you didn't join my Telegram channel, you can join my Telegram channel. Thanks all, thank you for subscribing. I will meet you in the next video. Thank you.